We just had the French GDP numbers a couple of minutes ago. So we had 0.2, I think, in the first quarter. Over the past 3 quarters, we grow zero. So we have virtually zero growth in the pipeline also coming up. And yes, we have very sticky inflation. Headline through food. I'm very worried about food inflation being so high in Europe, and we forecast that to stay high all through the summer. And we see clearly a bit of greedflation on that one, not on the rest. And then on core, I think we don't see the wage price spiral, which is still good. The problem indeed is we keep a bit growth artificially high in positive territory. And then as a result, we have still some inflation pass through, but also this idea that we don't have necessarily the competition environment or, the deflationary pressures on the pricing power of firms and so forth even started. And so that creates this sentiment. We have, for example, at least a couple more hikes for the ECB. And a lot of people are worried that they may have to do even more, meaning beyond June, not just go to 3.5% and then hold till the second quarter of 2024. So, of course, the question is whether we're going to have also some financial stability concerns in Europe, because we see what's happening in the US, and we are worried maybe about housing. We're worried about corporate credit, and we also are worried, of course, about government bonds. And so that's really what everybody's looking at right now in Europe over the next couple of months.
What's the risk out there at the moment that no one's focused on, Ludovic? Because it seems that we all know about the banking crisis. We all know about the prospects of higher inflation, interest rates to tackle inflation. We all understand, I think, what the Ukraine war has meant for energy prices. And markets have been pretty well behaved up to this point. And in fact, we're grinding higher and sideways and higher on most equity markets if we take those as perhaps the key markets sensitive to risk, either in earnings delivery or at a macro level. What are we missing? Are we all looking in the right direction for the risks?
Hopefully nothing. I think in Europe, the biggest risk is the energy crisis in the next winter. I know everybody feels that the experts cried wolf, over the past winter, but look at the gas storage and look overall at the situation. We still have a bit of a recession possibility towards the end of the year. So that's, for me, is maybe something, the energy crisis looks ahead, not necessarily behind, even though confidence effects on capital markets seems to say it's all behind. And in the US, it's, of course, a mismanagement of a liquidity crisis. Credit is a delicate thing, used to say Charles Kindleberger. I think right now we have a reduction of stock of liquidity. We have funding liquidity issues. But of course, there is a very fine line for this to become a liquidity freeze or a liquidity crunch. So right now we're avoiding it, but we need to be extremely determined to continue avoiding it. And I'm always worried about self-fulfilling prophecy on this one. Everybody is obsessed with cash. Everybody is obsessed with liquidity. And liquidity, as you know, in capital markets is the most pronounced word, but a lot of people don't really know what is behind. Right now, it's about cash, right? And it's about true liquidity positions. And I'm a bit worried with the feedback loop, commercial real estate. What's happening on mispriced corporate credit is, for me, the biggest, thing that we need to circumscribe right now. So I'm worried, of course, that this spirals down, in the wrong direction. Right now, it's okay. And that's why markets are not pricing in something much worse. But, tail risks do happen. We had a few of those over the past 3 years. So we need to be on our toes on this one.